Is your daily drive to the office going to get costlier? If you are wondering why the question is being asked, let us quickly recap some recent events. In a surprise move on April 2nd, Saudi Arabia and other OPEC Plus oil producers announced voluntary cuts to their production of close to around 1.16 million barrels per day. The latest cuts, which start from May, come in addition to the 2 million BPD output cuts that OPEC Plus agreed to last October. Coming back to the original question, it appears that for now, this decision will not hit your wallet. Petrol and diesel prices were unchanged on April 4th, keeping costs steady for close to 10 months. The last countrywide change in fuel rates took place in May 2022, when excise duty on petrol and diesel was slashed. But what about the road ahead? Before we can answer that, we need to consider how India's energy mix has changed. Indian refiners, who rarely bought Russian oil before the Ukraine war, are now snapping up discounted Russian crude amid a slew of Western sanctions on it. Russia led the pack of crude suppliers to India in March, supplying twice as much as Iraq, once India's biggest supplier. The share of Russian oil in India's overall crude import basket jumped to 35% in the January-March 2023 period, from 16% for calendar year 2022. During the same period, the combined share of Iraq, Saudi Arabia, and UAE declined to 43%, from 50% in calendar year 2022. And analysts say that there is no reason to believe that Russian oil flows to India are temporary. India imports 85% of its crude oil needs. So, how will the latest OPEC cut affect oil prices as far as India is concerned?
If you were to look at the total consumption of India's requirement, probably by the end of this year, almost 35 to 40% of that basket will move towards Russian crude, right? If you kind of put this all together, if you assume, for example, that the international prices will be at somewhere close to that $90 per barrel range, then India will probably be keeping that same range. India will probably be closer to $83-84 per barrel.
But Indian consumers haven't gained from the supplies from Russia, which come at a significant discount to global prices. Pump prices of petrol and diesel have been unchanged for close to 10 months because Indian refiners have not been passing on these discounts to the consumer. Against this backdrop, how will the latest OPEC cut affect Indian consumers?
The pump prices will not change right now. That is what my sense is. As long as the price is between 80, 90, maybe even between 90 and 100, we will have a situation where the consumer will not be paying more, and the oil marketing companies will probably be taking the burden of this higher crude oil price. But maybe once we cross the mark of 100, then the government will be forced to probably increase the retail prices. Right now, we can work safely on the assumption will be between 80, 90, quite a bit of volatility in maybe 1 week or 10 days from now. And after that, I think we should reach an equilibrium, which will be in this region of 80 to 90.
It's unlikely that the government will allow the oil PSUs to be completely free on pricing. There will obviously be some sort of nudges which are kind of put in place. So we anticipate that if you were to look at the kind of gross margin that these companies are likely to play, if prices remain in that $90 kind of a range, it's very unlikely that there will be a significant price increase to the retail consumer in the short term, right?
While declining marginally from the January print, the retail inflation rate in February still remained above RBI's upper tolerance limit of 6% for a second consecutive month. In this context, what will be the effect of the OPEC cut?
What we were discussing all this time about the retail prices of fuel, as long as the government does not change it, I think whatever happens to the crude oil price will not be having an impact on inflation. This said, we have seen that the government has also been revising the prices of LPG, which is definitely not linked to the retail prices of petrol or diesel, which means that with the current run of prices of crude oil going up, there will be a case of our LPG prices to also go up, in which case the government has been passing on this burden to the consumer. There will definitely be an impact on inflation. But on the whole, I think if we're talking about a number like 6%, will the needle move much? Will it move to 6.5? The answer is no. Will it move to 6.1? Yes, possible, but nothing more serious than that.
Farmers will also not be squeezed in the absence of a surge in diesel prices. But things could have been better. The Indian basket was hovering in the range of $73 to $74 per barrel during the second half of March. This had brightened prospects of a cut in petrol and diesel prices. However, the industry has told news agencies that the latest OPEC cut will delay any revision in fuel prices in India.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.